Hey, how's everybody doing this evening, this morning? I'll be with you guys shortly. I'll be right there very soon. Hope everything's going okay for you guys. If you can, just let me know also how the audio's coming in, and I'll see you soon. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Glad you all could be here today. And as always, if it is your first time here or you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up. If you like what we do, we really do appreciate your support. And again, thank you all for being here. So a little bit of a roll call. Peter Wilson, how you doing? Kawi Kaniokoa, how you doing? Who also got here? The MiG-26, how you doing, my friend? Aloha Stacker, how you doing? Aloha. Let's see. Lost Child. Lost Child, interesting name there. Again, glad y'all could make it. Roger, Penny Pinching Prepper, Pabar. Pabar, long time no see. I haven't seen you from for a while, I do believe. Seymour Rivers, our original ebook winner. I think he got the Silver Manifesto from David Morgan. The Book of Z, how you doing? Always Be Funding, Max Strong, how you doing? Glad you guys all could make it. Bill Clark from Boston, how you doing? Okay, so glad y'all could, excuse me, glad y'all could make it here. Uh, Veteran Prepper Jason Ernisi. First time I've seen you guys here. Welcome aboard. Truth Teller MD Vet, how you doing? First time I've seen your name also, so welcome aboard. So I do hope the audio's coming in loud and clear for you guys. And again, as always, you can find us on social media. Our website is silverbullion.com.sg. We are not just a precious metals dealer, but also we do specialize in systemic wealth protection. So we do offer quite a bit of other services that perhaps a normal bullion dealer may not. So do check into us if concern of a systemic wealth crisis is on your mind. Silver Bullion SG is our Facebook handle. Silver Bullion PL is our Twitter handle, PL for private limited. Bitly, the audio versions, bit.ly, you can find us at SBTV iTunes and SBTV Spotify. And, again, as always, if you do have that Telegram app, or even if you don't, go ahead and download it for your phone or even your laptop, your desktop. And this is where we do post articles pretty much daily as they pertain to gold, silver, the economy, finance, things like that. So that Telegram group, it's slowly growing, slowly but surely, and I think there's a lot of good info that's coming out there. So I do hope you guys have the time to go ahead and look into that Telegram group. So a few more names. Roll call. C. Pumice, Polynesian Pip. How you doing? James Richter. Rob G. How you doing? Rob G. First time I've seen your name. Also, welcome aboard. 49 Fine. Evangelon. Braden. Glad you guys could make it. So again, welcome. If you're in the U.S., good evening. If you're in Europe, I know it's pretty late for you, early hours of the morning. And if you're in Asia, good Monday morning to you, and hopefully we can help you get this week started off right, or we can get your week ended right, depending on where you are. So glad you could be here. So let me move on to hang on. That's gonna be the prize for this week. Hang on. I want to get to our upcoming guest first. And frankly speaking, I'm not sure. I'm not sure who our next guest is going to be, and that in time. So hang in there. Hopefully we'll grab someone unless one of you guys want to volunteer. Nah, I won't do that. That might be asking for a bit of trouble. You guys are too smart. So again, we'll move over to our next segment. And what we want to do is we try to say thank you for all the support that you've given us by playing this game that we call He Said What. And this week's thank you is going to be E.B. Tucker's ebook entitled Why Gold, Why Now. It's a three-part book that breaks gold down into must-know sections. The first section, Why Gold? History reveals an ugly pattern of government spending tomorrow's hard-earned savings today, leaving unknowing savers holding the bag. This is true. Why now? Recent events foretell a dangerous future for money today. And the third reason, the gold market. It's a how-to manual from bars to coins and everything in between. So we're going to be taking a look at his book, or in fact, we're going to be giving away his book to whoever can answer the question, something that Jan Nieuwenhuijs had said last week in the interview. Some of the rules to the game: download the Kindle app for either your mobile phone or your tablet from your app store. It's free, iPhones, Android, whatever you're using. Be the first to answer correctly in this live stream. U.S. winners will be given a link to download the ebook. Winners outside the U.S. will be offered an alternative prize at our discretion. Reason for that is because for some reason, Amazon, the Kindle, they will not allow an email link outside of the U.S. So it's kind of a strange situation. So it's not anything to do with us. So I'll give you guys Jeff Bezos' personal phone number next week, and you guys can all call him, ask him about that. Just kidding. But winners outside the U.S. will be offered a different prize at our discretion, and you're going to have to provide us an email. And I have my colleague Vincent. He'll be standing by, and he'll be able to grab your email through a hidden type of a feature where we'll hide your comments, so that way, if you win and you comment your email, it'll be hidden from everyone else. So I think I've spoken enough on that. So let's go and let's get to the question and get E.B. Tucker's book, Why Gold, Why Now? The question: in last week's Jan Nieuwenhuijs interview, what did Jan say will happen if banks have losses on assets? What type of gold reserves will act as a buffer? The correct answer to this is blank gold reserves. It was a special type of gold reserves, blank gold reserves. And it was something that Jan had said last week. So we'll go ahead and take a look at some of your comments to see what you think that type of gold reserve is. He did mention it, and let's just see if any of you guys can figure that one out. So let's see, Pabard. Yeah, I think it looks good so far. Hopefully, we'll get that guy on that you're talking about. Silver Warrior Fractional. Good answer, but yeah, not quite, but good answer nonetheless. Tier 1, no. Borrowed, no. Physical, Polynesian Pip, no. Physical, no. Carl Sittler, no. Liquid, no. Fractional, no. Depository, no. I guess it's a tough question this time around, huh? Should I give you guys? Maybe I'll give you guys a hint. Silver Warrior is right. Did I miss Silver Warrior? What's fractional? No, not quite. It not in Jan said it was a different type of gold reserve, and I'll play the clip afterwards just to show you guys that I'm not joking when I say it's strategic. No, stolen, no. Foreign, digital, contract, no. Okay, one hint. There's 1, 2, 3, 4, 5, 6. 6 letters in this type of gold reserve, and I guess this looks to be a tough one. So what I'll do is I'll let you know that it starts with a letter H. It's a type of gold reserve that starts with a letter H. It's not common, so it is a little bit difficult to get. Maybe maybe I will just um, okay. It starts with the letter H. I don't want to boggle you guys too much. Starts with the letter H. It lends or it ends in a, let's see, the letter N. Let me see if I can tweak this around a little. Um, okay. Oh, yeah. Polynesian Pip, my man, you got it. Thanks for saving me. Maybe this one was a bit difficult. Polynesian Pip, you got it right. Let me put it up there. Yeah, I believe you're the first to say it, just ahead of veteran prepper, Penny Pinch prepper. Great. Wow, everybody got it now. But yeah, Polynesian Pip, you were the first one. So if you don't mind, we'll get you to send us your email, and then we'll go ahead and give you the link to get that book. So congrats. Thank you. I was getting kind of nervous where I was gonna be stuck here. Maybe a bit difficult that question was. Anyway, Polynesian Pip, good job. Ralph Steiner, yeah, he did. Ralph Steiner, you were a winner last week. Kind of curious, did you pick up the book last week? I think we sent you the link, right? In fact, I know we sent you the link, so I hope you managed to download that book. Um, so what I want to do now, if you guys don't mind, I want to go back and take a look at a few things Jan Nieuwenhuijs had said, and thanks for participating. Appreciate that. A few things he said, because I think there were a few things that were pretty profound, and I think there was a lot of things in his interview that might have been the first time that we've heard a few of these things said. So it was pretty. It was an eye opener for sure, even for myself. As I tweeted out before, we've interviewed a lot of people, and the things that John had to say, it was right up there with anyone else, any other interview we had. So with that, I want to go and revisit some things John said, and maybe we'll just talk about it for a bit.
They can never, it's not about repaying the debt, because debt always needs to be refinanced in, government debt. But if it's sustainable, and for example, if you see now at the US, the debt is not sustainable, right? So that's a huge problem, and it will most likely be the debt burden will most likely be lowered through inflation, because that is what has happened for centuries, and that will be, very bullish for the price of gold.
Okay, bullish for the price of gold. Before I go on, I want to back up and show you what the answer was to that question, so we're all on the same page.
For example, if they have a lot of losses on assets, they can absorb those losses with this buffer, with this, they call it hidden gold reserves.
Okay, so there you go. The answer was hidden gold reserves. So I guess apparently it's a way where if they are losing money and the price of gold goes up, they have that because they have that in reserve. It kind of offsets or balances what their losses were. So when Jan had first said this, it started to come out that because central banks do this, central banks may actually indeed like gold, and he even confirmed that later on in the interview where central banks do like gold. So it's a bit of a different way of thinking of how we normally see and hear things. But with things like this hidden gold reserves account, it kind of makes sense as to why they continue to get reserves, why they've been buying reserves at a very feverish pitch, especially last year, the most ever in I think 50 years or so. So it all kind of makes sense what Jan had to say. So yeah, I just want to revisit John's interview. And what he just said was inflation will come, and inflation is good for the price of gold. And, this is very timely considering what Jerome Powell said, where instead of a hard 2% inflation target, the Fed is now looking at an average 2% inflation target. And the plans are to now let the economy run hot and let inflation even go above 2%. And that, my friends, is good for gold, as Jan pointed out. So again, he did make some good points there, and we've talked about this before, where Fed has been trying to get inflation for so long, and they couldn't get it. And if they do now get it, which they're going to go in trying to get that inflation, if they do get it, can they control it? and that's a very grave concern, because if they couldn't get it in the first place, what makes you or anyone think that they can control it when they do get it? Just might get out of control and hyperinflate. So that's something we gotta keep an eye on there. Um, so moving on, I want to go to our website, silverbullion.com.sg, and want to take a look at the gold price, see how it's doing. Okay, so again, this is our website. We just started taking payments in Swiss francs, so hopefully that'll help more of you. We do take payments in quite a few different currencies. So silver right now, 27.91. It's come down a little bit. It was over 28 earlier this morning here in Asia, but it's gone down just a bit. Gold is at 1970. So both metals are still hanging on about where they were at the close on Friday. Again, our investor kit, it is a free download. All you need to do is go to our website, silverbullion.com.sg, click on it, and there you go. You get this PDF, this investor kit, where there's quite a lot of good things in there. Some topics: why buy gold and silver, buying tax exempt bullion in Singapore, why even our company, Silver Bullion, and we do things very, very different from a lot of the other guys. So it's something that it's important information to know why we do things the way we do, and why we're different. Things like storing. Some of you, maybe storing is not an option. For others, storing may be something that you're looking at. Bullion genuinity guarantee, where we guarantee what we have is real. Buying process, a lot of these things. So it is a good article or publication to go ahead and take a look at. Do sign up for a storage account. You never know when you need it, or when you might want to consider it. It doesn't cost anything to sign up, and it doesn't cost anything to maintain. So having that storage account up and running and ready to go may be an option, considering the way things are right now. You want to have as much options as possible. If you need help with it, we can help you go ahead and do it. Sign up. Peer-to-peer loans. This is where, if you do store with us, you can use your gold and silver, your bullion in storage with us as collateral to go ahead and get a secure, low interest peer-to-peer loan. And a lot of people do this. We keep gold and silver at home, we store it, and basically it sits there. Nothing wrong with that. Other people, when they store with us, they see the value of using it as collateral to go ahead, get a secure, low interest loan. They still own it. As they take this, use it as collateral for a loan, they still do own it. It's still theirs. And that's important. And then they go ahead and they can get a low interest, secure peer-to-peer loan, and go ahead and redeploy their assets. Maybe buy more gold and silver. Maybe they want to buy some crypto with it, whatever it is. They keep their gold and silver out of the financial system, but still in the game, where you can still do things for them. Gold silver ratio 70.6. This has been really working its way down. I think it's just a matter of time, short time, before we see it stabilize in the mid to high 60 range. It's been toying in the low 70 range for quite some time. Found some stability there, so I think eventually it is going to dip below 70 into mid 60s and stabilize again, and perhaps even go further and further down as that ratio between gold and silver starts to close. So this is something to definitely watch. I mean, we were just at about 125 not that long ago, and we've come all the way down to 70. So what this is, if you don't know, you take the price of gold, you divide it by the price of silver. That tells you how many ounces of silver you need to acquire 1 ounce of gold. And when it's a high number, you really want to be getting silver. So right now, it still is time for silver. But as this number starts to dip, you're going to be wanting to get more and more gold, and flip your silver into gold. That silver is going to help you get more gold. So that's our website, silverbullion.com.sg. Carl Sittler should be 10-1 or 1-1. I tell you what, if that happens, I think a lot of us are going to be very, very, very happy. Well, people who have been buying silver anyway, they're going to be very, very happy with that happens. So let's see it. Let's see it happen one day. I'm all for it. I really want that to come to be a reality one day. Let's move over to Twitter. Twitter has been just amazing. A lot of people just really, well, losing their minds in some cases. I mean, Twitter is getting pretty volatile nowadays, so I really have to pick and choose what I'm going to show people because it can get pretty wild. Peter Schiff, the landlord is lucky Pinners paid to get out of the lease, but deals like this will send office rents plunging. Thanks to the Fed, many landlords are loaded up with debt, and even at low rates, they won't have enough rental income to make their payments. And this is something we're going to touch on in a bit, where what we're seeing because of the bug, or what they say because of the bug, people are working from home. They don't need to be in big cities, and they're moving out of big cities for various reasons. Again, because they can work at home. And then we're seeing, all these companies that have all this office space that they're leasing, they don't need it anymore. So they're getting out of these leases and contracts. And so you're going to see especially commercial property rates, they're going to go down. They are going to go down. They're going to take a hit. So if you're thinking of getting some commercial property space, wait a little bit or put in an offer. And it's they're going to be really taking losses right now, the commercial property real estate market. So that's from Peter Schiff, and we'll touch on that in just a bit. Quote the Raven: when you realize the US is becoming Japan, get ahead of the curve by investing in industry leaders in Japan. This in reference was with Warren Buffett. I think he's looking at buying some things over in Japan, from what I understand. TF Metals report, Craig Hemke. Just as we've been mentioning in every interview over the past 2 weeks, getting the crusty old grease ball. I'm not going to say who that might be, Warren Buffett. Interested in gold and the miners sets into motion a chain reaction of institutional interest. So from Zero Hedge, 16 billion. Ohio Police and Fire Pension Fund approves a 5% allocation for gold, according to Zero Hedge. And again, this is important because when you see these bigger institutions move into gold, you're going to see that gold price go up. You're going to see it pull up silver as well. You're going to see that silver slingshot start to come into play, and you're going to see more of an awareness for gold, where you're going to see more and more people moving into even physical. And again, that's going to drive up price, and it's going to push the supply to places that we may not have seen in a very, very, very long time, where supply starts to get difficult. So if you considering getting gold and silver, you're on the fence. This is another thing that should help you to get you off of the fence and make a decision. Where now we're seeing even pensions are coming into gold and silver. Big money is moving in. Jim Rickards. Yes, a reserve currency is just a numeraire. A reserve asset is the instrument you actually invest in. China does not have stacks of dollar bills in the basement. They own U.S. Treasury notes. This is one of many flaws of Bitcoin. It's a currency, but there are no assets. So that's according to Rickards, and he does have a bit of a point there. And this was in reference to Read and Think, where he asked, could the reserve currency and the reserve asset be two different things? So it's a good point by Rickards. Some may agree, some may not, but we all have opinions, right? The real Kiyosaki making a prediction. The Fed is out of bullets. It needs inflation. Zero interest not working. Question: what will the Fed do? Answer: buy gold, not T-bills. FDR did this in 1933, buys gold at 28, raised the price to 35. Will Fed buy gold for 7,000 to cause inflation? Gold, silver, Bitcoin win, savers lose. And this is unfortunately true. Savers are losing, especially with low interest rates and inflation on the way. What do you think, Robert Kiyosaki? So he asked that question, what do you think? And then we have Arcadia Economics, Chris Marcus, silver starting the week, looking hungry for $30. We'll see. We'll see if that happens. And again, we're going to touch on this also, the exodus of New York. Big lines this morning at U-Haul. For those who don't know, U-Haul is a company that rents out trucks and things like that. All the things you need to move if you want to move from location to a different location. So big lines at the U-Haul. Catastrophic setbacks in quality of life. People have had enough. So we're going to take a look at the reasons why people are moving out of the big cities. George Gammon. I'll congratulate George. He's one of the good guys out there. He's hit his 100,000 subscriber mark, and he got his plaque. So congratulations to George. I think we're even going to be trying to get George on. David Morgan, silver capacity all time high. Jan Nieuwenhuijs again talks about the Ohio pension fund going into gold. Tavi Costa, if you just came back from Mars, the Fed printed 2.8 trillion in 6 months, reduced rates to 0%, deficit shot up to World War II levels. Would you have guessed that policymakers would still be fighting deflation? None of us own enough gold. I think that says it all. None of us own enough gold. There's a lot of different opinions out there. That's for sure. Curious to see your opinions out here. Let me see if I can pull some of them up. Let's see. Nick B. I suspect the Fed will eventually try to force everyone to turn in their precious metals and give them a haircut like they did in 1933. That's a tough one. I mean, we do hear this argument all the time where governments will confiscate gold again. Some people feel they may, some people feel they may not. I tell you what, if things continue to get worse, I don't think there's any way anybody is going to turn in that gold if they choose to pursue it on that road or down that road. But it's a good question. I can't tell you with any certainty. No one can tell you with any certainty. And this is where you need to make decisions that work best for you and your family. No one knows. To be frank, no one knows. If someone tells you they know, I'd be hard pressed to believe them on something like that. Let's see what else is out there. Okay. Let me see. Sorry guys, just looking through this. Veteran Prepper 1. Income tax, state tax, federal tax, city tax, gas tax, road tax, school tax, tax basically is what he's saying. And Veteran Prepper 1, that is true. I mean, we're seeing governments really, really, really trying to reach into people's pockets nowadays. I think, last week we mentioned how California is even looking at some type of a deal where even if you move out of the state, some 10 years down the line, you're still going to be subject to paid taxes. So I tell you, states are really coming up with I don't know if creative is the right word, but they're coming up with all kinds of ways to continue to tax. And the thing they don't understand is when they do things like this, when they tax the rich, things like that. And I'll just be straight. I don't know how to say this, so I'll just be straight. People who have done well, they have more options than most of us. And people who have done well, it's easy for them to pick up and move. And the thing is, so when states want to go ahead and tax all these various things, and then you have the people who are creating the jobs, who have done well, things like that, and they move, who's left to pay those taxes? It's the people who didn't have the option to move. In other words, it's the people who may not be as well to do. They're going to be stuck at home paying all of these taxes that states are trying to impose. So when you want to tax so-called rich people, again, understand that they have the means and the ability to pick up and move, and the people who do not are going to be left in the state paying those taxes. So, we got to think long and hard about, what we're trying to do, because when the states or governments say, yes, we're going to tax the rich, yes, we're going to tax the rich, think about it. You got to think about it. It's for a lot of people, it's a nice thing to hear, but the reality of it is you may be the one that's going to end up paying those taxes. So it's something to think about and consider. So let me take a look at a few more comments out there. Um, let's see. Sepa J, the Fed might be more worried about the rise of cryptocurrency than confiscating gold. Um, I it's a good comment, but it's hard to say because my take on it is if central banks, including the Fed, are creating central bank digital currencies, I don't think they're creating it to say, okay, we've created our cryptocurrency, but go ahead and use this cryptocurrency. Go ahead and use that cryptocurrency. I mean, I don't think they're creating it to. They're not creating it for nothing. And so, it, in a sense, when the other week when we took a look at the bills in Congress and how they do plan to tax cryptocurrencies, um, in a sense, that is a form of confiscation on cryptocurrencies. So, it's not just about confiscating gold. They will confiscate cryptocurrency through taxes because right now a lot of people are avoiding those taxes, but it's going to come in play. And they may not exactly be able to take your physical cryptocurrency because there is none, the way they would take physical whatever else, like if some people believe gold, but they will take it through taxes. They will confiscate cryptocurrency through taxes. I mean, it's just my opinion. Everyone has their opinion, but there are bills in Congress right now, tax treatments as to how they want to tax cryptocurrencies. So you know, something again we all got to think about. So I want to get back to more things that Jan said. So here's another clip from Jan.
Sure. So if you want to go back to a gold standard, and gold standard can mean a lot of things. I'm just using this term as for a lot of setups with gold. If you go to a gold standard with the whole world, of course, the chips of the new game, the gold, has to be distributed evenly, because if you go back to a gold standard and only the West, let's say Europe and the US, have all the gold, that wouldn't be an equitable and durable system. So what happened is when Europe sold their gold, and it was not that the country that had relatively too much gold, they sold it. There was in part bought by Asian central banks or by Asian individuals like Indian housewives or Chinese people or etc. So it was kind of stimulating to equalize gold reserves across the world. So, and it's pretty striking now if you look at certain metrics that the gold is pretty evenly distributed across the world, which is a good foundation for a new system that incorporates gold.
Okay, so a new game, a new buy-in. Jan's thesis, it does make sense. I mean, so I want to put this question out here for you folks. For the new monetary game to begin, okay, if that's where we're headed, and it surely looks like it, for that new game to begin, you have to complete the first game, correct? I mean, the first game has to end before before a new game can start. And again, it's something that we have to keep in mind. If we're moving to a new monetary system, which it surely looks like it, the current one has to end. And the two most obvious questions are when does the existing game end and how does it end? And this is why we've been talking about on the how part, we don't know when it's going to end, but on the how part, it's either going to be peacefully through evolution where the monetary system just evolves into something else, or it's going to be through revolution where people are just going to be fed up with what's going on, and it may be a less than friendly transition. So again, the how part I think we understand, but the when we just don't know. And a new game, it cannot start without a blatant advantage by one player, right? I mean, otherwise, what's going to happen is the rest of the players, they're not going to trust that one guy. They're going to always be thinking he's up to something. They're not going to trust him. And what's going to happen is the other players, they're going to create pacts, unions, alliances, all against the player that they feel has the biggest advantage. And we're kind of seeing this the way things are happening right now. So my question is, can the new game begin with the US dollar as the world's reserve currency? Can that new game begin? So I just want to see some of your comments here. Um, let's see. Carl Sittler, 99% of Americans have less than an ounce of silver. I'd have to agree. I couldn't tell you for sure if that's the correct number, but it sure seems like it possibly could be the correct number. A lot of people don't. You show them a silver eagle, they won't even know what it is. It's we have to do better educating our friends. Have to do a lot better. Um, let's see. Um, let's see. Global nations cannot carry 1,000 ounces of gold to another country. I have to disagree with that, and I'm going to tell you why. There are things out there like cash gold token CACHE, and a bit of a disclaimer: I do have a micro share with cash gold token where what happens is each token is, I'm going to say, fronted. It's not just backed by a gram of gold, it's fronted by a gram of gold. So each token is fronted by by a gram of gold. And it's redeemable in a lot of places throughout the world. So if you're in the, let's say, the States, you buy a cash gold token and you feel things are a bit hectic, you want to get out of the States, let's say you move to Singapore, you can redeem those tokens for those 1,000 ounces of gold, just like he said. So you can take it with you. If you're in Europe and you want to get out of Europe, go to someplace in Asia or maybe go to the States. When you get there, you can redeem those tokens for those 1,000 ounces of gold. And this is what cash token does. It almost makes your gold borderless, where if you need to move and get out of a certain place, if you have that physical gold, agree, it may be hard to move that physical gold. But if you have something like cash gold token, you can actually leave if you need to leave. And when you relocate, you may be in an area where you can redeem that cash gold token again, or it can be even shipped to you in your new area. So there are there is a way to do it now. And cash gold token, CACHE gold token, does allow you, or does allow gold to become borderless. So in a way, I understand what you're saying, but the reality now today with cash gold token, because it's gold fronted, not just gold backed, this token, it allows you to essentially make your gold borderless. Um, a bit of concern though is with some gold tokens, their gold is in the future. It's gold in the future that will back the gold token, and that's a bit of a concern because if we see supply of gold start to tighten up, a lot of these guys, they may not be able to convert their token back into gold. Where on the other hand, for us, that token can only start when there is gold in front of it. That's why I like to say it's a token. It's not just backed by gold; it's fronted by gold. That gold has to exist here and now, and it's put away for that token. So it's very very different from a lot of tokens out there. It's a good question. I agree with it in some ways, but there is a solution to it. Um, okay, so let me see. Let's move to another comment that Jan made in the interview.
They can never, it's not about repaying the debt, because debt always needs to be refinanced in, government debt. But if it's sustainable, and for example, if you see now at the US, the debt is not sustainable, right? So that's a huge problem. And it will most likely be, the debt burden will most likely be lowered through inflation, because that is what has happened for centuries, and that will be, yeah, very bullish for the price of gold.
Yeah, okay, so I think we kind of went through this one already. Sorry about that, but yeah, inflation. The Fed is looking to get inflation. Definitely going to be very bullish for gold, bullish for silver as well. So let's take a look at something else that Jan had said. Sorry, just want to make sure I don't get these clips mixed up. But something else he said.
Sure. So if you want to go back to a gold standard, and
Okay, we had that one as well. Okay, so sorry about that. One more clip from what Jan had said. Let's get this thing in order.
um, the U.S. has overplayed its hand, right? So I think everybody outside the U.S. doesn't like the U.S. dollar. They still have to use it because they also, there's a political side to it, and they don't like this dollar. But there's also an economic side. So, for example, U.S. Treasuries still have a little bit of yield in it, and a lot of other bonds don't. So a lot of those countries still hold U.S. Treasuries, but Europe, Russia, China, a lot of countries want to get rid of the U.S. dollar, and the U.S. dollar wants to get rid of itself as well.
Okay. Now that's the first time I've ever heard that, Jan. Everyone wants to get rid of the US dollar, and the US dollar wants to get rid of itself. What do you guys think of that statement? I mean, I found that one pretty profound. US dollar wants to get rid of itself. It's I think in a lot of ways it's true. I mean, you know, President Trump has called for, lower rates. He's I think all presidents have called other countries manipulators as far as weakening their currencies, and here we have the US definitely trying to get their currency a bit weaker too, and we've seen it. I think on the Dixie it's been falling. I think what we're still in the 92 range. It's come down quite a bit. So, we it does look like the dollar's trying to get rid of itself, economically, even politically. There are things that politicians are doing to make holding the dollar not exactly one of the best things to do. So again, we're gonna have to see how this thing pans out. Uh, Take a look at some of your comments again. Um, Hang on, let me take a few. Let's see. Yeah, Roger, correct. Being the reserve currency is a burden. I think maybe it started out. Well, all things start out with the best intentions. Typically, they do. But when it got to a point where the endless wars, things like that, um, social programs, um, money had to be printed. Money had to be printed, and it could no longer be backed by the agreed amount of gold backing. And this again, it causes a distrust, and you gotta wonder if I'm working all day long, or my country people are working all day long producing. They send things over to the U.S. for these paper notes, and yet their central government continues to print these paper notes more and more and more. You're going to get the feeling that, especially outside of the U.S., you're going to get the feeling that I may not want these paper notes so much anymore. It's irresponsible right now what they're doing, and you may want to get off of it, get out of it, but you can't because of things like the petrodollar, and again because the dollar is the world reserve currency. And countries, they do. I think they've had enough, and I think we're even seeing people at home who are at home in the U.S. who are understanding these things more and more. They've had enough, and we've gotten to a point where we have to move over from the current financial system and keep assets outside of the current financial system. Again, things like gold and silver. So it is. I think it's more of a burden on the people than it is on the government, because ultimately all of this gets dumped in the lap of people. So it is something to think about. And he going back to it, people do want to get rid of the US dollar and outside of the US, and there are already uh they have created means to do it, as we've touched on before, where normally you use the Swift system. Europe has created the Instex system, and this is a adversary to the Swift system. So things are actually in place to move away from the US dollar. And again, um, it's just something we all need to really, really be aware of. Okay, so moving on. Yeah, I want to take a look at another tool. They like to call it tools, but it's really the same tool in the Fed's toolbox, and get your opinion on this. That same tool being the printing press. The Fed's plan is to lend 500 billion to large companies. So I want to go through this article and I want to see what you folks have to say about it. Okay, so we'll pull this up. So this is from the Washington Post. The U.S. plans to lend 500 billion to large companies. It won't require them to preserve jobs or limit executive pay. One more time. It won't require them to preserve jobs or limit executive pay. Are we getting this? This is why people really are going to be less than happy. Federal Reserve program expected to begin within weeks will provide hundreds of billions in emergency aid to large American corporations without requiring them to save jobs or limit payments to executives and shareholders. Okay? Without requiring them to save jobs or limit payments to executives and shareholders. Already, what do you guys think of that? People are steaming already, right? Under the program, central bank will buy up to 500 billion in bonds issued by large companies. The companies will use the influx of cash as a financial lifeline, but are required to pay it back with interest. What interest, really? It's still cheap money. Unlike other portions of the relief for American businesses, this aid will be exempt from rules passed by Congress requiring recipients to limit dividends, executive compensations, and stock buybacks, and does not direct the companies to maintain certain employment levels. Oh, this is incredible. Don't you guys better take your heart meds, right? I mean, I know you guys are getting palpitations right now. Critics say the program could allow large companies that take the federal help to reward shareholders and executives without saving any jobs. The program was set up jointly by the Federal Reserve and the Treasury Department. I am struck that the administration is relying on the goodwill of the companies receiving this assistance, says Eswar Prasad, former official at the International Monetary Fund and economist at Cornell. Nonetheless, a few months down the road after the government purchases its debt, the company can turn around and issue a bunch of dividends to shareholders or even fire its workers, and there's no clear path to get it back. Treasury Secretary Steve Mnuchin defended the corporate aid program, saying that the lack of restrictions on recipients had been discussed and agreed to by Congress. This was highly discussed on a bipartisan basis. So this isn't a left-right thing. All of Congress, shouldn't say all of Congress, but the majority of Congress agreed. This was thought through carefully. He said in an interview with the Washington Post, what we agreed upon was direct loans. We agreed upon direct loans that would carry the restrictions, and the capital market transactions would not carry these restrictions. Capitalism is on life support. I mean, when you got the Fed on one end buying corporate debt, now on the other end, direct loans where they can do what they want. Don't need to keep people employed. You can go ahead and give yourself higher salaries. You can go ahead and do buybacks, dividends, all these things. I mean, it's almost as if they're tempting people to bring out the pitchforks when you just read the article for what it is right now. Capitalism's on life support. And this is why I say when you hear an economist, any economist, and I'll just be straight up here, I might not even care who the economist is. I might not even hear or care what his credentials are. Because when he says the word recovery, this is what I think about. I'm thinking run. When I hear an economist say recovery, I'm thinking run. And, it's, I don't know how they equate what's going on with a recovery. So anyway, maybe I should take some hard meds too. I'm getting palpitations thinking about all this stuff as well. Anyway, I want to touch on what's going on with Main Street and particularly housing. And, one story is, of course, rent, the renters and people not being able to pay it. Another story is about how people are moving away from the big cities as we took a look at. And since more and more they're working from home. And a common denominator in both of these instances is the bug, or so we're being told. It's a lot of this is because of the bug, if not all of it. But again, the economy was really, we all know what was happening. But anyway, the bug is the reason we're being told for all of these things. And this, of course, is going to bring commercial property prices down as less office space. Even entire offices are not so much needed, as we saw from that tweet by Peter Schiff with, I think it was Instagram, basically paying their lease to get out. They don't want to stay there anymore. And with the slow economy, people, they're not spending. How can they spend? Retail stores, they're really taking a hit. Some are even basically dying off at this point. We're seeing more and more bankruptcies come in on one end, and on the other end, you're seeing the Fed stuffing money down the throats of corporate on the other end. So some people, they're going to be the chosen winners, and some people or businesses are going to be deemed losers. So it's, I tell you, they're really tempting people to come out with pitchforks at this point. But another element of why people are leaving cities is fear. Big cities, for some, simply, it's just not safe anymore, and that's how they feel. And that, of course, is going to drive down property prices, not to mention drive up insurance prices. I mean, you can imagine if you're in one of these cities that are rioting right now, you can imagine if you're trying to get insurance, good luck to you. Either you're not going to get it, or it's going to go way up. I mean, that's just what's going to happen. And so let's be clear about what's going on. Let's start with Main Street and see some of the challenges that are being brought on by the bug to Main Street.
Home during a pandemic has taken on new significance. It's a place for shelter, for safety, for learning, and for comfort. And as the coronavirus pandemic drags on and more tenants fall behind on rent, all that home offers is increasingly at risk of being lost. The eviction crisis looming over the entire country is particularly acute here in Houston, where a moratorium on evictions ended May 19th, months earlier than many major cities.
Constable! Hello!
It's Deputy Benny Gant's job to execute evictions.
Okay, guys.
He's been a constable in Harris County for 30 years.
There's not a lot in there. It looks like they got most of their things and left.
Okay.
They were given notice yesterday morning about 7:45 or so.
Deputy Gant is carrying out 2 evictions at Somerset Apartments in Northwest Houston.
So it's anywhere from about 15 to 20 of them right now that are currently pending.
So it's been
no
2
court
months
dates.
and you haven't got your
Nope,
evictions.
haven't got my court date. We always try to work out deals with people and arrangements, and they're pretty good about either paying or moving out. Not really having to get to this point.
Oh, okay. I'll stop that one. It had like about over a minute more to go, so I'll end it. But basically, people are getting evicted. Now, where are they going to go? Where are they going to go? Do you want to put these populations of peoples in arena and in arenas? And the thing with that is you take on the risk of spreading the virus. So you can't just stuff people in shelters that are full, and you can't just put them in places like arenas. I mean, you got to remember, these are husbands, wives, these are families with children. You put them in these places, how do kids go to school? I mean, how are they going to school? I mean, how are you going to handle the Wi-Fi, say, in these places to let your kids go to school online? How are you going to, again, handle things like Wi-Fi, things like that, for dad to maybe have to do an online interview for a job? So, this is a very, very real crisis that is about to, I'll say it, explode. It's going to explode if they don't continue to keep on giving grace periods as far as the rent goes. Then you also got to consider the landlord. What does he do? So they're going to have to come up with programs to help people along for the time being. Otherwise, like I said, you can definitely expect pitchforks to come out. But let's continue with this story.
The long-term solution is the feds appropriating and sending more money to municipalities and states so that they can disperse to their residents. for rental assistance and to help absolve their debt. And the shorter term solution is a grace period ordinance so that people can remain housed during a pandemic when houselessness is more likely to increase the number of cases and transmissions.
But property owners disagree that a grace period is the right solution.
At the end of the day, it has the same effects as an eviction moratorium, really, of kicking the can down the road and postponing a problem that's continuing to grow.
Houston Mayor Sylvester Turner refused to put a grace period ordinance before a city council vote at the end of July. But on August 5th, he and the city council passed an additional $20 million in rent relief that is to be distributed among property owners that enroll. Leonard Noble is among those who was saved by this aid, just a day before a judge was due to rule on his eviction. In February, he left his job as a security guard after getting hired as a TSA agent. Then, everything fell apart.
I was to, go to Atlanta for a 2-week training and then come back here. Well, the pandemic happened. That never took place because the airport shut down. Everything just happened.
He's tried to find other work, but everywhere he went, he was told no one was hiring. He's also struggled to get unemployment benefits.
All these systems, it's like a joke. Unemployment, you can never call and talk to no one.
The city's rent relief program will cover his back rent from June, July, and August, but it's still uncertain what he's going to do in the months to come.
My pandemic is not the pandemic, because I'm not dead. My pandemic is to me, who's going to look after me if you throw me to the street and I get sick?
So this gentleman, tough situation. He's trying to improve his situation. He's trying to improve it, and he gets blindsided. His story, it opens up multiple issues, and one of them being, of course, it's the wealth gap, which is something that we all know pretty well. And okay, so what do I mean? Right now, yes, there's a wealth gap, and the wealth gap that I foresee is not even going to be about the 1% and the rest of us anymore. The wealth gap is going to trickle all the way down to Main Street and become who has a home and who doesn't. If you have a home, you may be seen as the 1%. But, because house prices have been skyrocketing since we went off the gold standard back in 71. You can look at any chart of home prices. They're relatively a slow, stable growth until 71, and then it just shoots up. And that is because we went off the gold standard. A home, it's become a commodity, and many have invested in multiple properties and earned the title landlord. Nothing wrong with that, right? I mean, you work hard. Nothing wrong with that. In my opinion, looking forward, if the economy does not come back and housing becomes an issue, as we're going to see, an underlying resentment, the pitchforks, just might surface against landlords. Just saying this is something to be aware of. Okay, just saying something to be aware of, because if you put yourself in their shoes, they are going to look at homeowners as rich people. And that's why I say homeowners are going to become the 1% in a lot of people's eyes if the Fed continues to do what they're doing. And even though, we're middle class, whatever it may be, I think a deciding factor is going to be, does a person have a home? If he does, let's tax him. If he does have a home, he's rich. And I think homeowners are going to become the new 1%. So let's just keep an eye on that and be aware of it. So something else with renters.
When I look out this window and I see renters and people who have worked hard their entire lives to pay their bills, pay their taxes, and provide a good living for them and their families, it's really hard to see them get blindsided by this pandemic.
In general, we need to move away from thinking of housing as a commodity and as a speculative financial instrument, and really adopt a cultural shift that lets us think of a home as a place for belonging, a home as a place for health, a home as a place where our cultures are built. And if you think of a house as being any one of those things, decision making will be much, much different. And I think we would already have renters stabilize.
Okay, so she said something pretty it's pretty strong. If we think of a home as a home and not a commodity, it's a different way to think. So with the bug and this new normal of social distancing, shelters not ideal, not ideal, and people are going to have to. People need their own space to live, to love, to learn. I mean, it's just part of being human. We need our own space for these things. So how does it happen? Will governments confiscate, buy, rent second, third, fourth properties from landlords as homes for the houseless in the name of the bug, eminent domain type of a thing? Will the government build more housing as infrastructure projects to get people employed and to get people housed? Interesting times ahead for sure. And I think it was a couple weeks ago, there was an article that came out from Spain where if you have a secondary residence or whatever may be secondary third that's vacant, the government is going to take it from you. They are going to use it for however they see fit. So it's not something that's impossible for government to do. Spain is already going to go ahead and go forward with that. So landlords, I mean, I never expected to have issues such as these, but I know we all work hard, fortunate enough to perhaps even get one place and still work hard and invest a bit. And we try to get a second place, just trying to get things for our kids and our family and set them up. But with what the Fed has been doing for so long, I think even now it's starting to put, just the average Joe homeowner in a bit of a predicament. And these are things that we're going to, again, have to keep an eye on with what's going on. So moving from the renter side of things, how has the bug affected the homeowner, business owner side of things? I want to take a look at this article. It came out from CNBC, where small landlords dip into their savings as their tenants struggle to pay rent. So here's the other side of it. More and more renters are unable to make their monthly payments, and that is having an outsized impact on the nation's mom and pop landlords. It's the thing, it's just the average Joe. I mean, just regular people. Nearly a third of renters who live in single family or small multi-family properties owned by individual landlords were unable to pay their August rent. And we just kind of took a look at one of those stories. Individual landlords make up the majority of single family rental owners. Close to 23 million units in 17 million properties are owned by individual investors. That's according to U.S. Census. So more renters. Okay, we kind of read that part. Nearly a third of renters who live in single family or small family, multi-family properties owned by individual landlords are unable to pay their rent. Okay, we kind of saw that part. So let's move on. The main reason for their inability to pay was loss of employment or reduced income. Additional unemployment benefits put in place when the bug hit were helping tenants to keep up with their rent, but those recently expired, and a growing number of renters are now missing their payments during a standoff between DC, politicians, again, playing politics. On the other end of the equation, about a third of small landlords, they do rely on that rent for the bulk of their income. This is true. Individual landlords make up the majority of nearly 23 million units. Okay, we read that part. Nearly 54% of the income from a typical rental unit normally goes toward fixed costs associated with property ownership. According to an analysis by Zillow, these expenses include mortgage payments, property taxes, maintenance, insurance, and capital improvements. Without the rent, landlords still have to cover the shortfall. So it is affecting landlords. And we'll take a look at another article. This is from Wolf Street. Let me just go all the way down to the bottom here. This has to do with the property market in San Francisco. And we just saw Peter Schiff tweet about what was going on with, I think it was Instagram. So let me see if I can get this a little bit bigger for you guys. hang on. Okay. So what we're seeing in San Francisco in August is a record onslaught of homes for sale, particularly of condos that has come out of the woodwork in June, July, and August per Redfin's data. Before the bug, there was an inventory shortage, as the industry likes to call it, and now there's a glut. All of a sudden, there's a glut. The Case-Shiller Index is now showing pricing weakness in April, May, and June. This is particularly pronounced with condos, extends back 2 years, and is now taking on momentum. Trying to figure out why people are wanting to suddenly sell their homes in San Francisco is going to be an interesting guessing game. And there are likely lots of reasons. Some of those reasons that they are thinking are that investors want to get out before prices drop, especially with condos where carrying costs are high due to homeowner association fees. Airbnb hosts that can't make their mortgage payments off the limited number of guests they might have. People aren't traveling. They just don't need Airbnb much these days. People just wanting to get the heck out of Dodge now that they can, since they're working at home. Again, you work at home, your office does not need that space any longer. And you may not need to live in the big city as much as you once had to. So people who've lost their jobs cannot afford to live in San Francisco any longer. It's just the overall price is pretty high. And landlords facing tenants that move out amid dropping rents and high vacancy rates either have to leave the city themselves to move into a better deal. Upgrades for the same rent are now a thing for tenants. I mean, basically, they may have to leave themselves. They say upgrade. It's a bit of a downgrade where they're just choosing to get as much home as they need. So we're seeing landlords struggling, and we're seeing a glut, as this article calls it, of homes and condos for sale in a big city, San Francisco. The blame for the exodus in all of this is, of course, the bug. Bug seems to be the blame for everything, right? I'll offer you another point of view as to why the movement out of big cities.
You are seriously concerned about the long-term prospects for New York City, are you not, in terms of real estate anyway? It's a double whammy. A lot of unrest, a lot of, COVID, everything else. When does it recover? How significant is the haircut that most property values have already received here?
So I think, like I said, I think the COVID will pass and the big cities would be okay. But there's two new players you have to add to your thoughts on big cities. One is, of course, now I'd call it a safety. My friends and I had a friend who yesterday called me looking for a house in Greenwich. He's never ever left New York City. So, that is not, he's not alone. There's hundreds of thousands of people looking for suburban homes. And I would say it's not as driven by the COVID situation as it is safety and law and order. And that is now pervasive across the big cities of the United States, sadly, especially in the northern states like Chicago, Minneapolis, Seattle, Portland. I thought there were hippies in Portland. I didn't realize they had huge racial riots. And so I think for, we have an office building in Portland. It never occurred to me that we would have a lawless zone right near our office building.
Hippies. That's a word I haven't heard in a while. Hippies. I need your help, guys. Can someone explain to our younger viewers who may be watching what a hippie is, considering maybe grandpa was one, maybe even their mom and dad was one. So I need your help. Explain to these young guys what a hippie is. That's a word I haven't heard in a while. So yes, another element to people moving out of big cities is fear. We're seeing what's going on, right? With things like defunding the police, other things like the tax California may be imposing on people even up to 10 years after they leave the state. I mean, even hippies wouldn't stand for this, right? I don't know any hippie that would stand for this. So let me take a look at some of your comments here. Okay, let's see. Max, CNBC is a great comedy channel. Well, sometimes, yeah. Sometimes, yeah. Sometimes they do give pretty good info, but sometimes, yeah. Okay, you got me. You got me there. Okay. Um, let's see what else. What else is out is out there? Let's see. Anamax. So some people live in a 5x8 room or thereabouts in San Francisco. That's pretty small. You know what this reminds me of? And I think I touched on this in the interview with Jan, was when we saw the Hong Kong riots not that long ago. They were rioting and they were protesting for freedom, democracy, things like that. But the underlying thing with what was going on in Hong Kong was a lot of young people simply cannot afford. They're working, they're fully employed, they're working, and they can't afford a place to live. And you talked about this 5x8 room. A lot of pictures that I've seen from people in Hong Kong, it's no better than that. May even be smaller than that. And so I think, you know, in that case anyway, you had young people protesting for freedom, democracy. But I think underlying it, it was also because of the fact that when they look at their future, they're already working as hard and as much as they can, and but they simply don't have a place to call home, and that's got to be frustrating. If you put yourself in that position, it's got to be frustrating. So I think, you know, not making an excuse for anybody doing rioting or anything like that, just saying that you know it's because of the economic situation caused by the Fed, and I'll say it, caused by the Fed, which we've never recovered from 2008. They've left the economy in limbo for the past 10 plus years. And again, I think this is the problem why we are where we are right now. So I want to move on to another comment that Sternlich said. Some of you guys knew him straight away. That's pretty good. But another comment that he said.
And then the biggest new thing will be taxes. Because if you tax the wealthy even more in New York City, and I think it's 1% of the city is like 43% of all the taxes paid in New York City, and they leave, then the social net has to be absorbed by the remaining residents, and you can force them to leave. The Biden tax plan, which I'm happy to pay more taxes, but I don't think this increase in the capital gains rate is a good idea for investment in our country, which we need to do. That tax rate will go up like 15%, and if they don't reverse the SALT, you're talking 60% plus taxes on the wealthy in New York City, and they will leave. And they're leaving now. I'm become a real estate broker for Miami. I keep sending friends down and showing them houses they can buy, and they're buying. So, you know, I think it's a shame. I think the de Blasio administration has been a disaster, frankly. I can say that publicly. I'm not, and I don't think they understand that they appear to be hell-bent on bankrupting New York. And whether it's gyms, which are not allowed to open, I guess they'll open on the 2nd, but and small restaurants that can't serve indoors here but can serve indoors anywhere else. I mean, I really think it's crazy. And this tug of war between the mayor and the governor is in nobody's interest. It's like a macho race to oblivion. The city has to get its act together, and the city will recover. But on the margin, you know, what we care about is real estate values really for our investors. And yesterday we had an update of sort of leasing velocity in the United States in offices. And you haven't seen negative absorption in office since 2009, but it's here right now. But again, I'm an optimist. I actually think companies will come back to work much more aggressively than you think, as soon as it's safe for their employees to come back to the office.
Okay, we'll go over and touch on what he had to say, but I want to throw up a comment by Elbo Sanchez. Kind of made me think, why do you think they're pushing container living and tiny houses? My friend, you got me now thinking about that. I mean, we've been seeing this for quite a while, right? Tiny homes, container homes, things like that, trying to make it fashionable, trendy. And maybe you're onto something there, Elbow. You know, you may be onto something. Maybe they are, you know, it's already there where the seeds are planted that people will have to downsize a bit. So what a comment. You've been making me think on that one. But okay, so with his comments there, negative numbers for leasing office space, more taxation for property owners. It's not just in California, it's in New York as well. So we're starting to see this trend grow. Simply put, we are seeing things we just did not expect, and it does go back to the Fed and what's happening in the markets. So I'll play one more clip from Sternlicht.
I would never have expected the stock market to do what it's done to the extent it's done. And I didn't expect the market to be up on the year. I wouldn't have expected the global stimulus package. I think there's been over 500 of them. I didn't expect interest rates to be at 68 basis points on the 10-year, and they're down over 100 basis points from before COVID. So, we have massive stimulative forces, and I think they've overwhelmed what I think are the big underlying negatives of today's world and the post-COVID world. And it'll be a struggle next year as we have this tug of war between the trillions of dollars that are now in the economy and in some people's 19% savings rates for Americans today. So they're sitting on a lot of cash. On the other hand, you're going to come out of this with deglobalization forces, which are negative for the global economy. You haven't really settled on what your future of China and U.S. relations will look like. And for most of the S&P 500, China's consumer market is their growth engine going forward. You also haven't changed the fact that the Western economies are slowing in growth and population growth, and also that we've piled on 125% debt to GDP across the world.
Okay, so some more words to think about. James Orman, drop all the taxes and bring back manufacturing to America. I generally agree with that. The thing is, though, let's say U.S. gets manufacturing up and running again. Realistically, then we have to look at, can they compete? Can they compete with other countries like China, Vietnam? Can they compete with the dollar, as strong as it is? If it goes down, you can surely count on other currencies going down as well. And so if U.S. starts to manufacture, depending on the products, of course, can they compete with the rest of the world? I mean, U.S., I know, I've been in unions before, and I know how unions demand higher wages, higher benefits. So how does the company compete, if it starts to produce again with other countries throughout the world? I'm not disagreeing with you. I'm on board with that as well. I mean, you do have to produce, but producing is part of it. How do you then get people to buy your product if your product is expensive because it's produced and sold in dollars? So it's it's a tough one. It's a tough call, because even if we do get to produce, can people buy it? So that's something that we got to take a look at. So let me take a look at a few more comments here. Let's see. Okay. Well, okay. You guys seem to be doing pretty good. Good conversations that you got going on there. So let me just add a bit of commentary. On top of all this uncertainty, we have our central bank, the Federal Reserve, trying to get inflation. Amazing. Trying to get inflation. Inflation will make your dollar worth less. Okay, let's be clear on that. Your household and your living expenses are going to go up. And the dollar is not going to afford you the same things that it can afford you today. Dollar has always been depreciating. Does this help you? Does your central bank wanting to get inflation, does that help you? Probably not. Or does it help the central bank and the governments by inflating away the debt? But as last week's guest pointed out, the dollar needs to go in order to start a new game. We saw a little bit of a boost in the 10-year last week. The Fed is going to give more money to corporate. I don't know about you, but it seems to me that as the chips are going to be distributed for this new game, the Fed and the government is insistent on making sure that floating certain companies, they're going to float these companies over into the new game. And it truly seems this way. They're going to want some companies to survive and float them over as we begin again. So for those that already know, and for those that don't, if you want to float your assets over through the transition to the new game, your chips, your buy-in, is gold and silver and understanding gold and silver. Keep in mind, banks, they hold gold in reserves. So don't do what they say. Do what they do. They hold gold, you hold gold. You hold silver. And gold, as our guest said last week, is being equalized. The chips for the new game they do look to be gold. To be clear, this isn't financial advice, professional or otherwise. This is just an opinion, me saying things that I personally would do and am doing. I mean, if the bank is holding gold in reserves, I'm going to hold gold. And I'm going to hold silver because of things like the ratio and because of things like the silver slingshot. Silver is about a little bit more than halfway off its all-time high. So there's still a lot of upside in silver. So it's not too late to get in on silver. If you ever played in a poker tournament, you know everyone is equalized at the start with the same number of chips to begin. Now, I'm not saying central banks and governments or nations will all share equal amounts of gold or resources or anything like that. Although there is good reason to believe that chips in the new global monetary game, again, will be gold or at least partially backed by gold. I mean, we already know central bank digital currencies are going to come out. So more and more, this disconnect, it just seems to be growing between our government that is playing politics with people, as we saw this gentleman who's having a rough time. He's trying to better his life, and he's really having a hard time. You got to feel for that guy. And central banks who are playing with the people's money. Politics on one end, the central bank playing with your money on the other end. I mean, who's looking out for you? No one. Only you can look out for you. And again, this is why if you're on the fence, you need to understand what gold and silver do for you. And again, this is why I say your comments are probably the biggest thing to help someone understand what gold and silver do, is when they see your comments and understand why you did it. Why you did it. Maybe not me, but why you did it and why a lot of you are doing it. So probably the key takeaways from this live stream, it's the wealth gap that we're seeing and how homeowners may also be considered to be the new 1% if we continue to see people getting evicted. They're just going to look at you as, hey, you must be rich. You have a home. So he's one of those guys. He's one of the rich guys. And, it's no fault of your own. And, it's just something to be mindful of the way the psyche may turn to think. So we just got to understand things, be as compassionate as we can, help as much as we can. We're all in this same boat together, right? Be a blessing, not a burden. So, with that, the wealth gap, gold partially backing or partially backing whatever that new monetary system may be. And of course, gold, silver as a head to the inflation that the Fed, they're going to get. Make no mistake, they are going to get that inflation. They're going to push it. They don't care about that 2% anymore. They're looking at an average, meaning for over 10 years that they couldn't get it. If it runs hot above that 2%, they're going to let it go because they need to average it down. Same like how we average cost, our silver and gold. And of course, the dollar is trying to get rid of itself. You look at what the Fed's doing, what governments are doing. Dollar is trying to get rid of itself, but the rest of the world they're on to it. If dollar continues to go down, I think you're going to see other currencies continue to go down. The U.S. wants to start to manufacture. They have to sell it into the global economy. If the dollar is too strong, how do you compete with places like China, India, Vietnam, Mexico, Brazil? How are you going to compete with that? I want to play one more clip from our past week's interview with Jan Nieuwenhuijs. One more clip. How likely do you think that the European central bankers have met in secret to discuss laying the groundwork for this possible new type of gold standard?
Very good question. I'm glad you asked, because I also forgot to mention something. And that is that before I published the article about European having prepared a new global gold standard since the 1970s, I asked one of the ex-central bankers of a European central bank in Europe. And I asked this person, I know him, he follows me on Twitter, and I follow him. And I said to him, I found a lot of evidence, and I find it just so striking that the Dutch central bank said, for example, that they sold gold to equalize reserves, or that's my conclusion. And I asked him, did you know about this policy, and could you maybe share something about this? And he said, yeah, well, I knew about this, but I can't talk about it because it's confidential. So, and I encountered this on many occasions that. You know what an NDA is, right? A non-disclosure agreement. So central bankers and ex-central bankers can talk about a lot of things about monetary policy with euros and buying bonds and interest rates and everything, but they are not allowed to talk about gold.
Well, so there you go. I mean, it was taken a little bit out of context, so maybe perhaps watch the full interview to get the full context of it. But it's been in the works. I mean, it's been in the works. So take a look at a few more comments before we head out. Jonathan Holmes, in order to bring back manufacturing, the currency has to collapse first. Yeah, and this is what we were just touching on, where if manufacturing comes back, you have to have people who can buy your products. You have to have distribution channels, all these things. And you're competing against other countries, as we've said. How do you compete when your product is going to cost $50 and another country, their product is going to cost you maybe 15? How do you compete? I mean, we may say the quality is better and things like that, but I've been seeing a lot of better quality products come out from Vietnam, even from China as well. So the quality factor, it's rising. It's rising. So I don't. In some cases, quality, sure, definitely still a decision, as a buying decision, but it's getting closer. And again, how do you compete now? The currency has to come down. USD has to come down, and if USD comes down, you can, with a certainty, those other currencies will come down as well. So again, you what do? You get silver and gold. That's what you do. Let's see, Ray Ung. Cities should file for Chapter 11, default on muni bonds and pension funds, lower taxes, and start from square one. Ideally, I agree with you. The thing with that, though, is we're looking at a full-on meltdown for those things to come into play. And maybe it has to happen. It's a good point, Ray. Maybe it has to happen. But again, if so, another reason why you should be having yourself some silver and gold. So it's a good point, and it's another point again why you should be looking at silver and gold. Exactly. Let's see what else is out there. Let's see. No taxes on a tiny house. Okay, let me see. Let me just take one or two more comments, and then I'll head out. Let's see. So I'm just trying to go through some comments here. Kenneth Mark. Well, you're a young guy. So smart for a young guy there, huh? Just kidding. The jobs will return, but much more automated. That is true. There is definitely an AI push. So fewer workers than in China. Well, that's a good point, I suppose. If it's automated AI, then your production costs can come down. But on the flip side, it didn't provide jobs for us humans. If I'm understanding that comment right, or how I'm seeing it, AI brings the cost down, but it didn't give employment, and so again, we're still kind of stuck on first base there, right? We're really not getting anywhere yet, and it's again, this is a huge problem. I mean, in a lot of ways, we are backed into every corner possible, and some of it is our fault, where maybe we've gone beyond our means, spent beyond our means, but a lot of it does have to do with the Fed. Low interest rates for so long. You got to go into riskier things to find yield. Your savings, you didn't get anything on your savings over the past decade. Your 401k might have done well. your pension is in a bit of trouble because it had to go into riskier assets, which is why maybe the Fed is continuing to pump up the market, why the Fed is buying up corporate debt, why the Fed is now giving direct lines to corporate direct loans, I should say. So there's just a lot, really a lot of things going on, and the key to all of it is, excuse me, the key is you need to take care of yourself, your own household, and again, that is where I look at silver and gold because we are going to transition, so you need that vehicle to transition what you have over into the new game, as we've been calling it, even though it's not a game. And again, those are stores of value. Those are things like silver and gold. And for some people who are in a bit of a different situation, maybe you do need to store some of that overseas. I mean, we're looking at, big cities, people moving out. Why? Because they don't feel safe. And I think we're looking at, especially in the States, if I had to gauge it, peace and stability, chaos, my needle is pointing more towards chaos. And so for those reasons, I may want to look at shifting some things outside of my country, my jurisdiction, just for safekeeping for the time being, because I don't know what's going to happen with my city. I don't know what's going to happen with my local government, state government. I don't know what's going to happen with the federal government, what they're going to do. So I may want to consider holding it outside. And going back to that whole, you can't take 1,000 ounces of gold with you. You can. You can do that now with things like cash gold token, CACHE gold token. You can do that. It pretty much makes gold borderless. And again, it's a token. Typically, guys say gold back because that seems to be the term, but I'm going to say it's fronted by gold. Now, this token is fronted by gold. Gold is there in the front of that token. So if you're worried about that situation where, what if gold, you can't get gold anymore because whatever with the supply may be getting tight, or, governments buying it up, nationalize it, whatever it is, how do you redeem your gold token for that physical gold? That's a question you're going to have to answer on your own, figure out on your own. Whereas cash gold token, the gold is already there. It's already there. It's already put aside to account for that token. So it's a totally different way of doing things. And which is why I like to say it's fronted by gold. It's not just backed by gold. Let me see what else is out there before we head out. I think I saw something. Hang on. Yeah. Fat vegan. The Fed will burn, as will the U.S. government. It's in trouble. There's no doubt it's in trouble. Burn is a hard word, my man. But it is in trouble. I can't see pitchforks not coming out. And again, these are reasons why people are moving out of big cities. Governments are going to want to tax them, property owners, and the people who are having trouble, they're going to look at the homeowner as one of the 1%. And I think there's probably no getting around that. That's just how they're going to look at you. You have a home, you must be rich. And I don't know, they might not like you so much anymore. So just things to be aware of. Sometimes we have to learn how to go stealth with your wealth. We did a live stream on this a very long time ago. Things to blend in, but the best way to blend in is just to help, help the best you can in whatever way you can. Be there for people as best you can. Be there for your family. You have to take care of your family first. And again, these are why we get into things like gold and silver. Yes, ghetto linen. Pitchforks are already out in many cities. Absolutely. That is true. One Royal Wolf. I think anyone who's bought gold and silver off the advice of this channel should chip in a few dollars to say thanks. You're helping us prepare for the inevitable. Appreciate your efforts. One Royal Wolf, thank you. Sincerely, thank you. It's just about when you see things coming down the road, it's not about money, trying to make a profit, fear mongering, things like that. It's about genuinely caring for people. And you see husbands out there, they're the leaders of their families. They need to protect and provide. Maybe help them if you can. Help a man understand what he needs to do. Moms usually handle the budget better than dads. So moms should also know what to do. And the thing with this, if you're doing this, let your spouse know. If you're buying gold and silver, let your spouse know. Because you are going to need your spouse's support. I've seen it time and time again, over and over again. One spouse does something the other spouse doesn't know, doesn't understand. It's not on board. You have to talk to your spouse to get your spouse on board. That's the best way. You have to do it together. So again, thank you, and thank everyone for being here and spending time with me. I hope this was a benefit or value in some way to your day or to your evening. We're going to get through this. We will get through it. Just be a blessing, not a burden. We're all in this together. And as I always say, just silver up or saddle up for what's coming ahead, and silver up as well. I'll see you guys next week. Take care. Love you all.